Hi, welcome to Smart Start with the Iowa SBDC. We are in lesson 5, and that is developing your business plan and your financials. So we're going to cover creating financial projections and also preparing that business plan. And again, we're taking all of the planning that you have done prior to that through the business canvas model and all of the market research you have done. And basically the business plan is just writing that all down so that you can give it to people that want to invest in your product or your business, or you can bring it to a banker. You know, a lot of times you might not need a business plan because you did the planning. You don't need a formal piece of paper to write that down. You might have it on your sticky notes, and that's kind of your business plan from doing your research. But in preparing a business plan, it's usually for a pitch for investment or going to a banker. Or maybe suppliers. Sometimes suppliers, in order to extend you credit for their inventory, they will need to see a business plan. So there's a lot of different reasons. On the other hand, creating financial projections is something that I think whether you're looking for money or if anyone, suppliers or vendors or anyone else is not asking for it, I think it's a super great tool for you to do so that you can get that break even. So I am going to first go through that and the numbers that you need to kind of break down. So when I work with a client, I break down the numbers so it's easy. So I have them research these numbers, and then we'll help them work with a cash flow tool to put these numbers in. Score.com has a great cash flow tool, and there's many others that you can look online. But what you want to do is you first want to research these numbers. All of our 15 centers do have programs they work with, and they will work with you and let you use the programs we use to create great financial projections. But this is where we start. So the first thing we're going to start with is researching out your startup costs and breaking it down as specifically as possible. We want to get to 95% correct. This is what my startup costs are going to be. And by startup costs, I don't mean how much money do you want from a bank. What I mean is every single dollar it's going to cost you to key open that business. For example, operating costs like insurance, monthly insurance payments wouldn't be in there unless you need to pay up front before you open, like 2 months. So then that would be considered startup. But if it doesn't start until you actually start, that would not be a startup cost. So you want to go through, how much is the land if you're buying land, how much is the building, what about renovations, what about beginning inventory, signs, uniforms, a website. Everything that you want to have in place costs money, so you want to put that as your startup costs. You're looking at those startup costs, and then we'll talk about that in getting financed, but you also want to put, like if you bought a stove for $10,000 and you have it sitting in your garage before you open your business, that's part of your startup costs. You just paid for it. So when we look at startup costs, we break it down into sources and uses. And the sources is, who's paying for that? Am I going to go to an investor? Am I going to go to a bank? Or am I paying it for myself? But you want to include all of that in your startup costs because that's your beginning balance sheet. The second set of numbers that you want to detail out as much as possible is your operating costs. And I know it's easy to kind of say, I have no idea, but most of these operating costs can be researched. We do have templates that you can look at to kind of what are the different categories. Again, that's on iowasbdc.org, financial templates. So the operating costs are going to include your rent, your utilities, professional costs, like if you're paying for a lawyer or an accountant, insurance, I'm not sure if I said that, maintenance on different equipment that you have in there. Sometimes if you're buying all new equipment, you probably have warranties on those the first year, so you might not have a lot of maintenance. But we want to look at the next 3 years at the least. So when does that warranty go out, and how much is that maintenance going to be in the third year? So really looking, marketing costs. So that's where coming up with a marketing plan so that you know what your budget there is and how much you're going to pay on marketing. All of those operating costs, those monthly costs that you have to pay, licenses, fees, certificates, training for your employees. So look at, try to really delve down on what it's going to take to operate your business. I will say most people come up very short on that. So really think through that. Kind of think through the systems that you're creating and the planning you've done, and figure out the day-to-day and what you're going to need to operate. The next thing is developing that your product and service prices, what the price is and what the cost is, so that you can easily do a projection. So almost kind of coming up with your menu, even if you're not a restaurant. What's your menu of prices? What's the formula in figuring out those prices? And what's the cost of good or services sold on that? So if your service fee is $45, is there anything else that comes out of there? Is there a margin there, or is it 100% at 45? So figuring out that menu so we can kind of put that together into a projection, that's the key piece that we need to know. How much do your services cost and how many customers will you have, so that we can put a guess in those projections. So when you're estimating your sales per month, it's 100% guess. But it's educated, because we're looking at your services and you did research on traffic counts in front of the place that you're going to. But know that it is 100% guess. But the projection is the pro forma, some people call it, or the projection is so important, because we're taking the research startup costs, your operating costs, and what you think your prices are going to be, which we're pretty sure on. I mean, let's say we're 95% sure on those numbers, and we're putting in 100% guess into those. But we're coming out with, once we do the division, is we're coming out with a break even. So the least amount you need to make to pay your employees, to pay yourself, and do everything that you need to do and make zero money. So now you know where you need to be to make money. And I did mention paying yourself, and I think it's very important, unless your circumstance is not normal, to make sure that you pay yourself. So like if you and a partner going into a business and you're saying, we're not going to pay ourselves until we make money. The problem with that is that might be the case on paper, or as the year goes by, that you didn't pay yourself. But when you're doing your projections, you're looking at that break even and what's successful. So if you don't put pay in there, you're never going to pay yourself. So you want to get to that. I mean, you might not hit that break even that first year, but you want to put what you need to live to, in that, and pay yourself, because that's part of the business model. So make sure that you put that in there. It doesn't mean that's going to happen that first year, but at least you know where you need to get in the next 6 months, 1 year, to get to that point that you can pay yourself and break even. And then everything after that is profit. So after doing the projections, developing your business plan. So the projections, like I said, will be needed for a bank in accompaniment with a business plan, which is a narrative of what your business is doing. But I think it's really important to do those projections just so you see where you are. It kind of gives you that budget and that checkpoint to go, okay, are we there, or do we need to send someone out in the street to start spinning signs to get customers in? So you just know where you need to be to get to that break even or higher. The business plan is something that you're formalizing, putting down in paper what you're doing so that you can present it to someone. What is usually in a business plan is, number one, the business description and opportunity. So what problem are you solving? What exactly the business is? Are you an LLC? Really getting into that business description. It's not about marketing and selling anyone on it. It's being plain and simple. Here's the research we did. This is the model we came up with. Here's the problem we're solving. And it's to the point. If you're a complicated business and you have a technology that needs to be discussed, you're going to have a longer business plan. But if you're a small business that you're not, redeveloping or having new technology, it doesn't have to be 50 pages. If you're getting all of the information in there and you have 3 to 5 pages and it's describing it and it's showing how you're going to make money and how you're, the problems you're solving and getting the point across, that is going to be sufficient. In fact, no one wants to read a 50-page business plan. So if you can get that information, as clear as possible and as quickly as possible so that your investor or your banker or whoever is reading that can get to the point and go, yeah, great business plan, great business idea. Not necessarily great business plan. What you want them to say is great business idea. So the second part is going specifically through those products and services. What exactly are you offering? Going through the pricing and putting the menu in there, that menu that shows the pricing and the cost, just so that they can see what your margin is in real life with the products, and that you've done that research, that you know how much that cup of coffee is going to be, or what freelancing in an hour costs you, showing that you did that research. The next one is market analysis and a marketing plan. So putting down that information about your customers, your industry, your market, and your competitors that you found through your business planning, and prove to whoever's reading the business plan that you have the product that's going to solve the problem and can make money. Next, you want to talk a little bit about your operational and management plan. Who is doing what? So your resume, and if you have partners or teamwork, kind of going through that management plan of who is taking care of those systems in your business. And the operational plan. What are your hours? Who's doing the accounting? How are you doing accounting? How are you accounting for this? So just making sure that all of those systems, so a bank can or your investor or whoever's reading the business plan can go, they know what they're doing. They got all their bases covered. I don't have to worry about them falling in this area and not being able to pay me back. So they just want to see that you have that plan, that here's our hours, here's doing what, here's kind of our day-to-day and how things are getting done and how we're handling everything. And last, the section that I just went through before, the financial plan. So attaching that to the business plan and having that projection. One thing that we will change with the financial plan in presenting it to a banker or an investor or someone is what we're going to attach to it is a critical assumption plan. So we're going to have the projection, and every line we're going to explain how we got that number because there's assumptions to it. So we just want to make sure that they know that we didn't just grab that income number out of the sky or that insurance quote out of the sky, and we just explain how we came up with that number. So that's what we call critical assumptions. So that would be added to the projection to present formally. So on iowasbdc.org, we do have a business plan template. You can go there and download that and kind of look at it. We also, through the state, have licenses to a business plan template called LivePlan. It's all online. So if you contact us and work with us, we can give you access to that. Usually it's between 15 and 30 days that we let you kind of build that up. We have a limited amount of licenses, so we can't give you a lifetime license, but it's a great, great tool. It, again, has a cash flow tool on there, so if you do the research and get the numbers that we went through, you can just put it right in there and do your cash flow right there. So LivePlan is a great tool that we have access to and can help you do.